Joining me with more is Larry Shover, Chief Investment Officer of SFG Alternatives. Larry, what are you expecting from this report today?
Well, the ending stock report, it seems like most people think the narrative is going to continue, that stocks around the world are very, very tight. I mean, let's consider the fact that we're seeing these surprises like we saw yesterday, China booking 290,000 tons. That caught everybody by surprise and just continues the bullish narrative for soybeans.
Okay, so why aren't we seeing a big rally then in soybean futures ahead of this sort of tight supply narrative?
Well, I think it's because there's a positive risk premium built into the soybean future. I mean, people understand that the South American planting season's finished. They understand that Brazil has run out of exports, putting more demand on imports from the United States that we just don't have to deliver. With that said, we have traders. Traders are long about 26% of the open interest, about 157,000 contracts to be exact. With that said, it's creating this positive momentum, assuming logistical concerns, assuming weather concerns. We have a very long planting season, growing season in South America. That combination, we are vulnerable for a big downdraft, but right now, most traders are very bullish.
Right, you mentioned big downdraft. What is corn's role in perhaps accelerating some downside here for soybeans?
Well, I think if corn continues to be lower, I see non-commercials tend to be really short corn, and if it continues with that downdraft in corn, we'll have to see at some point soybeans follow suit because corn just becomes a cheaper alternative for a lot of people.
Right, so therefore demand goes to corn versus soybeans. We lose some of the demand for the beans.
Exactly.
Let's talk about supply, though, for a second. You mentioned Brazil, but next year the estimates are for Brazil to produce 88 million tons.
Right.
That's enormous. It's going to surpass the U.S. When is that going to trickle onto the market and cause some pressure on prices?
Well, I think that goes to the story that I think it's vulnerable. The market's vulnerable for a downdraft as worldwide supply continues to expand, but supply continues to expand as well. So it's really just catching up to itself. Even though there's going to be a record crop, the market continues to price in logistical concerns that we continue to see in South America, and also weather. Let's keep in mind we have till March or April until the harvest season, so it's a long time to worry about what's going to happen with the crop.
Right, until you start planning it. Let's talk about demand. You know, you mentioned China, how strong those import numbers came in yesterday. Their stocks-to-use ratio for beans, so how much extra they have, is at 10%. Put that into perspective for us. How low is that? What could demand be in the future?
That's very low, 10%. I mean, no one seems to believe, and that continues to keep momentum on the upside for soybeans. I mean, it could go much higher than that, almost to 15%, if not higher.
Right.
And I think, you know, the market's not fooled right now. People continue to realize it could go much, much higher.
All right, Larry, thank you so much. We appreciate your take on